Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
This is CNBC Africa First in Business Worldwide. I'm Bruce Whitfield. This is the first edition of Share Shootout for 2014. I am the judge, juror and executioner on the most vicious, brutal, stock-raving, mad, stock-picking show on television. And welcome to the show. Now, Ronaldo won the Ballon d'Or, but is it true that Ashley Young won the fallen all over the place still? Is Apple's Chinese distribution deal for real? And in 2014, will berets outsell red t-shirts? We don't know the answers to these perplexing questions. What we do know is we have a man who went to go and find himself in South America, another who spent his holiday in the Eastern Cape. They preferred the remote wastelands of our world. Introducing our champion from last year, Nick, I take no prisoners, Crail from RMB, even though I look friendly. He's from RMB Private Bank. He takes on the global backpacker Byron. I can grow a beard and shave it off in an afternoon. Lotta from Vestact. The house rules are still the same. There is no cash bar, there are no finger foods, but you do bring your own peanuts, and that's the only way you get your energy. But our guests have pre-picked 3 shares. Neither knows what the other holds, but each must accept at least one of their competitors' picks. The longer they leave it, the more likely it is that they have to accept something they really don't like. Each has got just 30 seconds to argue their stock pick, so let us get started. You went to like where Rhodes, Yugi, McClear, all of those funny little places. Berkeley East. There's no flat space in Berkeley East. It's all mountainous and hilly.
That's the beauty.
Did you catch any trout?
Not so much.
Not so much.
Not so much.
You've got the beard, which ruined my introduction. Byron, you shaved your beard off because you did have a beard as you travelled as some sort of Latin American. You could be Latin American. You get away with it, actually. Che Guevara lookalike.
Yeah, a few people asked me for directions.
You went, ¿Quién no
then they realized that I could not speak a word of Spanish.
But you managed for 3 months and you survived.
Yeah, barely.
Okay, yeah. Barely. Well, you don't seem in too bad a shape for it. So, you're the champion, Nick, so you can decide who should go first in the first edition for 2014 of Share Shootout. Do you want to go first, or do you want to let Byron, who's very good at losing the show, incidentally, if you want to let him go first so you can play your hand?
By all means.
Okay, do you remember anything about the stock
market? My ratio is 50%, so that's not too bad.
Yeah, you won one, lost one, and let's see whether or not you can improve that ratio today. Let's see if you remember anything, because you did go travelling for an awfully long time last year. Byron Lotter from Vestact, I am surprised by your first pick, because last week we saw trading updates from ShopRite and then from Woolworths as well. The market didn't seem too enamoured with Woolworths trading update. However, it is top of your picks list. The 62 billion rand Woolworths empire in 30 seconds. Why?
As you've mentioned, I've done a bit of traveling, and I really have not come across a retailer that is quality as Woolworths all over the world. I think it's absolutely fantastic in terms of the products they offer, the innovation in terms of their food offerings, and their buying of their clothing. I think as South Africa grows in terms of middle class, it's an aspirational purchase, and people will aspire to come and shop at Woolies. I think most importantly also, they've just brought in Candice Swanepoel as the face of Woolworths. I mean, I think obviously that's a no-brainer.
You see, I wasn't convinced until the last 5 seconds.
Easily convinced.
Easily convinced. And I think she'll do well for them. What's interesting about Byron's point is they're getting the clothing right. They've got Trenery in there, they've got Country Road in there. The Australian businesses of Country Road and Trenery are doing well. Really nice sales growth in the Australian businesses. Their clothing business used to be a drag. It's now a good contributor. You can't argue against that.
I can't argue against those exact points. I think the reality here is that it is a fantastic business, but really a fantastic business in a South African environment. My problem with it, perhaps, is that I don't think its growth prospects further outside of these borders are going to be as easily achievable as something like a ShopRite or a Mr. Price, and I think that will hamper them slightly. I also think if you're then looking at mainly a South African environment, the biggest issue you've got is consumers still under pressure, and I still think that they will continue being under pressure. Having said that, I think, as mentioned, it's a fantastic company. Problem then comes through to valuation and whether you're
Let's talk about valuation in just a second. I mean, you talk about South African consumers being constrained, and yes, that is true, but just the food business alone, they've got food inflation within the Woolworths network of over 7%. That's 3 times higher, I think, than the ShopRite food inflation level, yet they grew their food business by 15%. So South Africans are shopping up. It's that aspirational thing that you're talking about, Byron.
Yes, they're less affected by inflation because their clients are wealthier, and inflation unfortunately does affect the wealthy a lot less than it would, for say a business like ShopRite. An interesting fact I saw the other day was they sold more bottles of Mutton Shandon in 7 bottle stores in Nigeria than they did in the entire of South Africa.
This is ShopRite.
No, this is just Mutton Shandon.
Yeah, this is ShopRite selling Mutton Shandon. You can pronounce it as you like.
Yeah.
Posh French champagne. Let's not fight about how we pronounce Moët.
So the demand for luxury goods
Yes.
and higher end spending is going to be throughout Africa. Yes, I agree with Nick that it might be difficult to get there, but the potential is there.
Okay, the potential is there, but you're worried about the valuation. The trades are 21 times last year's earnings, which is not an outrageous multiple for an expanding Pan-African retailer. Your argument is it's not Pan-African enough.
It's not Pan-African enough, and we've seen them. You mentioned Nigeria.
They came back.
They came back, and that's really the issue, is that it does play in a certain segment, which in South Africa is fantastic. They are taking market share. At the same stage, I mean, one of their sort of competitors, I would say, is something like Pick n Pay, which has really been struggling over the last couple of years, and ShopRite as well. If you have a look in Johannesburg, and specifically, I suppose, the northern suburbs, but there's a large sort of uptick of buildings going up, shopping centres going up, and all of these retailers fighting for that space. The question comes, at a certain point, there's going to be a level of saturation. My biggest argue is exactly that, the Pan-African side, whether there will be interest there, and whether they can sort of continue growing.
So what's the prognosis then? Do you accept it, or do you run the risk of looking at his next 2 picks? And I love playing that game. Do you take it, or do you hold out to see what else he's got in his palette?
Let's put it this way. I reached for it, but I dropped it.
You dropped it. And then then as it lay on the ground, you shot it in the back of the head. Okay,
this is a brutal show.
It is a brutal show. It's been eliminated. Executed is only
Next
Nick
time
Crail
I see you shopping in Woolworths.
Don't mind shopping there. It's also the woolly shoppers don't want to be seen in ShopRite. It's like we don't want to be seen. No, all I'm doing, I'm only picking up tickets at CompuTicket. Honestly, that's all I am. That's all I'm doing. And I happen to see some good value stuff. Nick Crail from RMB Private Bank. Your first pick is an interesting one. Another one that is trading at record levels. Last week it went through nearly to 530 Rand a share. It is an exceptional story. It's heavily Rand weakness dependent and oil price dependent. The oil price has been fairly subdued for a long time. You know I'm talking about Sasol. In 30 seconds, tell me why you like it.
Well, Bruce, you sort of started off very nicely there. The first and short-term sort of driver is this continued Rand oil price strength that is coming through, and that's going to definitely buoy up their short-term earnings. But I think going slightly further afield, you're having a look primarily at their Project Phoenix, their cost-cutting exercise, where they're looking to take 3 billion out of it over the next 2 or 3 years. And then lastly, and this is the big maybe, is their possible re-rating based on their ethane cracker and possibly later their GTL product in the
There's a lot of possibly going on. You've got Byron talking about possibly nice opportunities on the African continent for Woolworths. You talk about possible benefits from the ethane cracker. You're talking about, of course, the expansion in Louisiana. Nice opportunities there for the company. You've got to be a Sasol fan.
I do like Sasol, but I think at this stage it might be a bit expensive.
At a multiple below 10?
No, that weaker Rand has already been factored into the share price. Now the Rand is at about 10.80 to the US dollar. There is going to be a stage where money will be coming back into developing markets, because developing markets are still growing. When that happens, the Rand is going to start strengthening again, and that is obviously going to be negative for Sasol. There's also a lot of concerns about them spending nearly their entire market cap over the next 5 to 10 years in the US. They're taking a huge risk. I like the potential of that, but are you going to put your hard-earned cash into something like that? I'm not so sure.
Well, you're prepared to put it into Woolies, you won't put it into Sasol. Defend the point about the fact that they are taking this enormous risk. In the same way as Famous Brands changed the shape of its business by going and buying what was it, Fabulous Foods, no, Wimpy, they bought Wimpy, for a bigger than its own market cap. Is Sasol taking a similar risk?
So I think you've got to question how many resource companies out there can literally over the next 10 years double their production. Very few. So it is a possible upside and big upside at that. Secondly, none of that has really been priced in. So as you alluded to, it's not exactly trading at sort of expensive premiums.
But
so
that worries
as they come closer.
Okay, that bugs me because all of this wonderful potential and it trades at a multiple of less than 10. The market's not yet buying David Constable's strategy.
That's why you buy it. If they'd bought everything, then you'd say, well, they've priced in all the potential that's there, and you've still got the risk. Here, they haven't priced in anything, and all you've got is this risk. I mean, if it doesn't go ahead, I mean, the chances are that we're going to know sort of mid-2014 whether this ethane cracker is going to go ahead, and they're going to spend some money until then, but they'll see that it's viable, and I think the ethane cracker definitely is quite a viable option. It looks very attractive.
Byron, can you shoot it down?
With my experience, markets only really start giving a premium to a stock when they're absolutely sure. With a big risk like this, if anything, the stock will afford a bit of a discount for quite a long time, within the next 5 to 10 years. On the basis of that, I shoot it down.
So boom.
Yeah.
You shot down on Sasol.
Shot down on Sasol.
So we got 2 shares so far, both of them being shot down. Nick and Byron are gearing up for an interesting fight because Byron lost it from Vestact. Your second pick is yet another one that is slightly out of favour. It's worth nearly 50 billion rand on the JSE. It peaked over 100 rand a share. Then the company came out with a badly worded trading update. The company is?
I wasn't even listening.
Well, you see, you're not paying attention. Take advantage, Byron. Okay, minus 10 points for Nick. The company came out with a badly worded trading update.
Yes.
Okay. The company came up with a badly worded trading update. The chief executive then justified the trading update and explained it away. The share price recovered for a day or two, but then settled around the 80 rand level. The company I'm talking about, of course, is Discovery. Tell me why in 30 seconds you like it.
Yes, Discovery have absolutely nailed it in becoming the only insurer that I know of that clients actually like. That Vitality product, I think, is phenomenal. Not only does it make clients healthier, it's good for the company in that having healthy clients is much better for Discovery. This Vitality product, they are going to go and sell throughout the world to insurers, whether it be developing or developed markets, because it's a fantastic product. That is going to be a huge money spinner for Discovery going forward.
Okay, and you're not worried about the health insurance, the bank, the investment business, and all of the other things. It's all about Vitality. Is it vital enough for you, though, if you were paying attention? Nick, sorry to keep you awake. You've still got Eastern Cape area.
It is vital enough for me, to be honest, so I'm definitely going to get on board. I think, you know, as Byron has said, it is the innovative leader in the insurance space. They've gone into many different sort of products. Not all of them have made the money. They have made mistakes. They've gone into US, it's kind of burnt their sort of fingers.
But they're not shy at cutting, however, when they know that they're on a hiding to nothing.
So they take their risk. They go in, and if they lose, they sort of exit in a relatively. I do think. I mean, there's some questions around their UK business. That's not looking that fantastic. However, I would say that Vitality is really the key going forward. So it's costing them some money to roll it out now and to partner up, but they'll automatically get access into that client base. And they're going into very large markets.
They've upped their options in Ping An. I think they've upped their stake in Ping An, the biggest insurance company in the world, in the health division of Ping An, the Chinese insurance company. That's an interesting growth strategy for them. Whether or not it works, again, is a story for the future. But Vitality is the one that clinches it for you.
It is. It's not cheap. It is expensive.
Vitality is outrageous. You're right. Oh, you mean the share price?
I mean the share price. But I think, where else do you find that sort of innovation, specifically in that place? So it's a good company. Good management.
And a nice diversification in there as well, in terms of their going into short-term insurance, competitively as well. Going into the life insurance business is huge, and where the health business in South Africa is sort of tapered, the other businesses have come in and supported them. Their investment business, though, not performing brilliantly in terms of investor returns.
No, I think it had a good first year. I think this last year has been a lot tougher. When you talk about valuations, you know, you say that it's come down from 100 Rand to 80. So I think this is a great buying opportunity. It's still trading at a bit of a premium to embedded value, but that's rightfully so. In China, 37% of medical spend is still out of pocket. That's a huge percentage. So the potential to grasp the uninsured in China is still massive. And that's just in China. They're going back into the US. They've got a good agreement with Walmart and the healthy foods. And like I said, this is going to, they sold Vitality, the intellectual property, to a Singapore insurer. And I think this is going to carry on going for a long time to come.
You're taking it, Nick?
I'm taking it.
You're taking Discovery at 80 bucks. There we go. Sold to Nick Crail from RMB Private Bank.
To the highest bidder.
You got the big thumbs up. Okay, Nick Crail from RMB Private Bank. I'm interested in this one as well. We have seen the cell phone producers, cell phone providers sort of peak in South Africa. We've seen nice growth markets. MTN has been very aggressive on the African continent, into parts of the Middle East as well. But it kind of hit a bit of a ceiling. It went into Myanmar, tried to get into Myanmar, into Burma. It lost out over there. Where is the growth now for MTN in 30 seconds?
Well, the growth really is coming from its existing 21 markets it operates in. So Nigeria is its biggest market, through earnings at the moment, and it's a fantastic large market, the largest in South Africa in terms of people. However, if you have a look at the whole African continent, and even going into the Middle East, it really comes down to how many people have their cell phones and the actual chips, and ultimately that is actually very low. So they've still got massive scale to actually continue growing it. I think the reason you really want that though is because of the dividend yield, number one, and then secondly, you want it because they've effectively got a platform. They've got this infrastructure going into these undeveloped markets, and they'll be able to push out further products using that. So it's not only data.
Okay. Now you're taking the mickey.
And the rest.
Okay, now you're
I think that was another 30 seconds.
You lose another
I got
10
cons.
points. You lose another 10 points because he didn't finish within 30 seconds. Because we've got this very complicated scoring system in the background that judges you all the time on dress code.
It's brutal.
It is on dress code. Paisley and Stripes loses another 10 points. Right.
Come on.
I'm just wearing my Woolworths attire.
Absolutely. You're living your stock picks. Give me a sense, please, as to whether or not you like MTN.
Yeah, I'm glad I shut Sasol down because I like Sasol, but I like MTN more. I agree with Nick 100%. I think the penetration in terms of access to internet in Africa is still extremely low. As smartphones get smarter, it's going to change our lives even more, and that's not going to be any different in Africa. People are hungry for that kind of information and those kind of services that provide, and MTN are going to be, the people that provide that. So I agree with Nick.
Okay, so you're taking MTN with a big thumbs up.
Yep.
Easy one. Okay, so we're not even going to argue about that. Both Nick and Byron are gearing themselves up for the final stock picks as we get into the last leg of the show this evening. Let me remind you what they have chosen. From Byron Lotter from Vestact, Woolworths shot down, too expensive, with not sufficient growth opportunities on the African continent, argues Nick Crail. Discovery, however, the Vitality program is the story that Nick Crail likes, so Byron Lotter gets the thumbs up on that one. Nick going for Sasol and MTN. Byron's worried about the high-risk profile of Sasol, especially with it spending almost as much of its market cap in the United States over the next 10 years. Nick Crail says they'll decide by the middle of 2014 whether or not it's worth the risk, and as a result of that, he likes it, but Byron doesn't. Shot down Sasol, but he accepts MTN. 400 billion rand market cap, a company that only just came into its existence 20 years ago. More on the other side of this as we get into the final stretch of the first edition of Share Shootout for 2014. To the final stretch of Share Shootout, the first episode of 2014. What we've got is a close run contest, and before the break we had Byron and Nick both give us their stock picks, and we look at Byron Lotter from Vestact, Woolies and Discovery. Discovery accepted, Woolies shot down, and Nick Crail from RMB Private Bank stock picks, Sasol and MTN. MTN accepted, Sasol shot down. Byron, you went first in the last round, so you can choose. Do you want to go first this time, or do you want Nick to sweat?
I'll let Nick start so I can finish with a bang.
Okay, there we go. We'd like you to finish with a bang if you don't mind. Nick Crail from RMB Private Bank. Your final pick is Adventurous. It is one of the biggest shares on the JSE. It's one of the market makers on the JSE. It's worth nearly 500 billion rand or thereabouts. It went through 1,000 rand at the beginning of December. It went through 1,100 rand before the end of December. It has been one of the hottest shares of the last 5 years, doubling in price last year. And you still think that Naspers is a decent pick. In 30 seconds.
Still a hot share. Quite simply, you're looking at 10 cents at the moment. That's driving the share price and drove it last year. And that really is a platform business, specifically around mobile, but offers many other things into a very captive market. Dynamic platform, so they offer a lot and they continue to offer more. Looking at financial services now going out to their clients that they've got. Not only that, but then you've got the TV businesses, growth going into Africa. But lastly, and the most exciting thing that you've got is their e-commerce platform that Naspers is rolling out into emerging markets, so online classifieds and e-tail, and that's really where it comes.
Stop now, because otherwise Byron gets jealous and then.
I understand.
Okay, so Byron, you like Discovery for the story around Vitality. You like the Ping An story for Discovery. So China is a key factor in the growth story of Discovery. It's been absolutely critical in the growth story for Naspers over the last 5 years. Has Naspers run its course at 1,100 and something rand per share?
I do like Naspers. The only concern I have is, what's going to happen in markets throughout this year. Everyone's saying that developed markets are a bit expensive. And if we do see a pullback, I really do think these social media type stocks are going to get a re-rating because they are still very risky trading on such high multiples. So the Facebooks, the Twitters, the Tencents of the world are going to pull back. Tencent being nearly 90% of Naspers' market cap poses a huge risk to that Naspers share price. And if we do see a re-rating, we're going to see Naspers pull back very hard.
Rebuttal, Nick.
With a lot of ifs. Wasn't that the same argument that was used exactly a year ago? If we see a re-rating in Tencent, then we're going to have all these sort of troubles, and it was totally correct. But a year ago, if there was, then there would be problems, and yet we sit here 100% later.
We do, and we
just having a look at the risk, I'm not sure that's an
We get closer and closer to a re-rating, though. Each year that passes with the doubling of the share price, there's got to be closer to some kind of correction of the share price. Do you really believe the Tencent valuation?
Not necessarily, and the reason I say that is because it's very dynamic. I mean, even at the beginning of last year, they were primarily thought of as a gaming company.
Yeah.
It's a year later, no longer they're thought of only as a gaming company. Now it's suddenly WeChat, it's global, it's now global. They really have diversified and grown their business. They've got massive cash generation that they use to go out and to sort of expand. So while you're still getting, I agree, if it was a traditional business that was opening no new lines of business, I would say yes, that's looking expensive and there's large risk there. But because of their diversification and now global diversification, I think the sky's still the limit.
Argue that.
I have one more concern is, unless you actually go to China and use the QQ and the Tencent products that they have, I don't think you can ever fully understand exactly how that Tencent business works and how it makes money. There could be a complete culture shift. They've just allowed Xbox.
They've had 2,000 years of developing a culture.
Exactly, but this is a 3-year culture now. They've just had Xbox and PlayStation and other game consoles allowed in China for the first time ever. That could pose a huge competition to Tencent.
That shows that there's an outside world that needs to be tapped.
There's an outside world, but Tencent's having a look at outside its borders. It's got businesses now that are in the States. WeChat is a global sort of initiative that's going out there.
But China is still their main market. What happens if they allow Facebook to come into China?
What are the odds of that?
Google more prominence. Well, they let consoles come in. They are liberating all the time.
But a console is a one-way communication. The moment you allow Facebook in, it's a two-way communication.
They are liberating more and more. As people get wealthier there, they're going to want to know more about the outside world.
Your problem that you have...
longer term, though.
It's longer term, number one, but no, the problem that you have is it's a platform. It's offering many different services into that platform. That platform has over 700 million users that are on it. You need a bigger platform to come in and to displace 700 million people or million users. This is not something like, Facebook.
I love this discussion, but the mad people are speaking in my head again. Okay, so we've got to either accept or shoot this one down. Nick Crail, you've made very compelling arguments. I look at this thing and it scares the living daylights out of me. It scared the living daylights out of me this time last year and this time 2 years ago as well, which is why I'm wearing jeans and not a full suit. Byron, you're going to shoot it down. Despite your love affair with it, despite the fact you love it, it's the valuation, it's the risk in social media space. That's why you're going to shoot it down. But the best thing about Naspers that I have seen in a very long time was WeChat being advertised on billboards on the road. And you think, hold on a second, this is the world's cutting-edge technology using old media to advertise itself. I thought to myself, perhaps there's a weakness in the system. Perhaps it hasn't got the traction globally that it has got in China. That was my concern. But Nick, it's been shot down, but I think fairly reluctantly. Now, for the most adventurous pick of the day so far, because this is a little bit like Naspers. It has had the most stellar rise. It has been spectacular. From a 60 million rand company when the current group chief executive took it over something like 11 or 12 years ago, this is a company with more than 10 billion rand. It's got some competition coming into the country with Burger King, 3 outlets opening in Gauteng fairly soon after opening to long queues in Cape Town. I'm interested in why you like famous brands at a multiple of nearly 29 times in what we've been discussing earlier, a constrained consumer market. 30 seconds.
You go to the Zone in Rosebank or the Nickel Shopping Centre on a random Monday night, you will see that the restaurants are absolutely packed with people eating. It's becoming a huge pastime in South Africa to eat out, almost like going for a braai. I think this kind of concept is going to carry on growing in South Africa and throughout Africa. Famous brands have perfectly situated themselves with both the fast food and the luxury sit-down restaurants. And I think they are going to be pioneers going up throughout Africa doing exactly the same thing. People love to eat out and it's still a new concept in Africa.
Thank you, Kevin Hedwig. I'm sorry, Byron Lotter.
It's a compliment.
What do you think of that one, Nick?
I like the concept, so I believe in the long term you're 100% right. I think it's a good business formula, and it's definitely going to go places. I think so much of that has been priced in, and that's really the problem. At the moment, you know, on a PE where it sits just beneath 30,
yep,
it's not looking expensive. Everyone has that same sort of opinion, and they've made many bolt-on sort of acquisitions which have complemented things. But as you know, and you see with a lot of businesses, the bigger they get, the harder it is to try and find these sort of businesses. Either you've got to organically grow, and organically growing at a 30 PE is going to be very tough. I think I've got some risks, and here's
there's pizza in Dubai, pizza in Mumbai. They're growing in India. They've got John T. Rhodes as their brand ambassador in India because he's a superhero there. They've got some interesting growth opportunities, but not good enough.
Priced in.
Priced in.
Priced in.
You're shooting it down.
I'm shooting it down.
Which brings me to the terrible part of the show. I'm not taking responsibility for today's decision because I would call this a tie. I think they've both made some very compelling arguments, despite the way in which Nick Crail is dressed like a banker. And
but with the tie.
What we think of bankers, and the fact that the two trendsetters without the ties, their white shirts, really have set things. So I'm leaving this up to Karabo. He is the producer of the show, so I cannot be held responsible. I'm calling it a tie, Karabo. What are you calling it? I can't hear you. Did you say Nick Crail? Okay. Oh, that is the decision of the producer. Well, we are going to host a battle of the stock pickers next week. Byron, your track record is spectacular, 50-50. I'm afraid it now goes the other way. Byron, by the tiniest of margins, will you come back one day?
Are you sure you didn't say Nick Crail was gone?
No, he says Nick Crail must stay. He said the bearded wonder must stay. You used to have a beard. Had you kept the beard, Karabo having a little beard himself, he likes beards. I'm afraid, Byron Lotter, you're toast. And he's never going to forgive me for that. It's not me, it's Karabo. I like you too, Nick. You don't forgive me. Oh, the politics of this thing. Remember, we are hosting a battle of stock pickers next Tuesday, where our winner is going to be taking on the very tall Gary Boyson from RMB Private Clients, right here on CNBC Africa, on the most vicious stock picking and unfair show on television. I would have given it to Byron. Send your share suggestions to the producer, Karabo KTL. You can send the abuse to him. That's his handle. You can send your compliments to me, and adoration, of course, to @BruceBusiness. Join us again next week as we continue to pick out a winner and shoot out the rest here on the unfairest show. Is that a word? On television. Good night.